One of the hottest stocks of this year to date is Supermicro Computer. However, as you can see from the monthly chart, prices have cooled a bit and have become quite expensive. The question is, could a stock split help this stock spark renewed interest? We're going to get into that in a minute. But before we do, I just want to look at a couple of levels of interest. One, you have a monthly bias level at $230. And so you had a rallying price, basic candle rally out, pulls back, fills any remaining unfilled buy orders, shoots higher. Now, keep in mind this momentum, because the other two levels of interest, momentum didn't even give a chance for price to pull back. So you got, this is the weekly chart, rallying price, basic candle, rally out. So we're going to mark that now. We'll call this weekly buyers. And then price moves higher. This was a great setup. Scroll down to the daily chart. Rallying price, basic candle, rally out. Price nearly dips its toes in the upper portion of this zone before moving higher. Again, this is the stock pulling back. Now let's get into this article, and then we'll continue with the charts. So for those who don't know, Supermicro Computer is the business of making high-performance computing equipment. What does that mean? The company makes server racks, cooling systems, and other physical hardware necessary for the creation and management of advanced computing systems. What does that mean? This company makes the things you buy when you want to build or expand a data center or supercomputer. Its server racks are ideal for holding GPUs, the brains behind today's advanced AI. And since the top supercomputers and data centers use hundreds or thousands or even millions of these GPUs, business is booming. However, stock is expensive from an absolute value standpoint. You know, shares trade around $950. That's in comparison to a year ago when it was under 100. We're talking almost a 10x, a 10 bagger. So retail investors often lose interest when a stock reaches a certain price threshold, say above $400. It's why a lot of people have bought Bitcoin at current levels, although they don't know that, like Bitcoin, stocks you can buy in fractions. Nevertheless, it becomes a psychological barrier regardless of whether the barrier is truly justified. Many retail investors can't afford to buy whole shares. The price rises too high, and that seems to matter. Now, the pros against a stock split, or the cons rather. There are pros and cons for potential stock split for Supermicro. On one hand, shares now trade above 1,000, which undoubtedly depletes some level of retail investors. Nevertheless, the company's leadership may not be ready to initiate a stock split yet, given how quickly the company's shares have valued over the past 12 months. All right. Just getting into a reason for the delay. Perhaps the board thinks the stock price will eventually decrease, meaning a reverse stock split might follow a stock split. Reverse splits can have a psychological effect on investors too, and can cause selling spree. I don't think this is going to happen because we're only in the first inning of AI boom, which should last at least through the end of this decade. Question is, where can you get long? All right, now I'm just going to mark it at 850. However, here's the issue. When price pulled back, it never took out this high. So this level may not hold. If you're patient though, and if you get a massive sell-off, you get a market correction, look for this daily buyers level to hold. That'll be your opportunity to get long. Thanks for watching. Subscribe. Please like the video.